The altcoin market is starting to rally, as you can see over here from the crypto bubbles chart. It is up on the hourly at least. So slowly but surely, there are small movements that are starting to take place within the market. And from an economic events perspective, today is definitely an important day. There's a lot that's going on. And we know that the most important days you want to mark off on your calendar is going to be Wednesday and Friday. I can't open the Forex Factory calendar. It seems to be under maintenance or something, but mark those off when you can get back online. Make sure you pay attention to that calendar. Without further ado, let's get straight into the show. And I wanted to start off over here with this 𝗕𝗵𝗍 letter over here. Markets in 2023, what have they looked like? Well, we've had a whole lot of action, a whole lot of things that have taken place. Bank stocks have been halted 10 times per day, which is absolutely insane. That is not normal circumstances. The Swiss government is covering losses for UBS and Credit Suisse. You have the FDIC backstopping deposits on collapsed Silicon Valley Bank. The Fed providing liquidity after years of quantitative easing. And then you have regulators delisting or auctioning banks. And he says here in the 𝗕𝗵𝗍 letter, this is very far from normal. And it is very far from normal. So the question is, can you actually trust this rally that's been going on in crypto? Is it just a relief rally, or is it the start of a bull market? So these are some of the questions that we're going to answer in today's show. Moving on, he also covers over here that it may seem like the banking crisis started overnight, but in reality, this is actually a product of $4 trillion in printed stimulus. It's years of 0% interest rates. It's the Fed literally buying up bonds and ETFs. That's another form of how they implement quantitative easing. And then 22 straight months of 5% plus inflation obviously creates these massive wild swings within the market when you whipsaw like this. And actually did a show on that. It's still on the channel. You can go look back from December, called the bullwhip effect. And this is what causes the bullwhip effect, where you have these massive ranges and wild swings within the markets where people are trying to constantly reprice what things should cost. And he says we are paying for years of free money. In essence, that's what's going on right now. So with the FOMC rate hike estimates coming in, it looks like on average, the median estimate is that it's 25 basis points. That's what we're going to be looking at. But if you come here to the tool, yeah, you can see you have a 75.3% probability of that 25, and then 24.7% that it's going to be a complete rate cut. And Elon Musk agrees. He says that the Fed needs to drop the rates by at least 50 basis points on Wednesday, meaning that obviously you're going to go into a full-on pause or pivot within the market. So no more rate hikes whatsoever. That's at least according to Elon, what he thinks is needed. Now, looking at Bitcoin and what this actually means for Bitcoin and the crypto market, well, if you have a look over here, then you can see from 𝗍𝗆𝗍𝗍, he says, despite this aggressive rally, the aggressive rally, this Bitcoin move appears to be mostly spot driven. Divergences between spot and perpetual cumulative volume deltas, open interest is still very low, outright and relative. That's a good thing. I'll tell you why now. And then funding rates and 3-month futures basis has been muted. So I have mentioned to you guys before, when you're looking for a market bottom, what you essentially want to see is you want to see open interest pretty low relative to what it's been in prior times. That shows you that there's a lot of market participants that are still pretty scared and they don't trust the rally. And that means that the rally could technically still have legs. So if you have a look at it, there it is. Everything is over here. Look at the spots, how massively that's moved up. This is on a higher time frame. And then you have the futures traders, which have shown that it's gone down. Open interest pretty low relative to previous times. And then you have also the futures annualized rolling basis. Pretty much the interest has overall mainly gone down. I mean, it's evaporated in comparison to what it looks like when you're in a strong rally. And then you have here the funding rates as well. Look at the funding rates have mostly been negative. So you're looking at the red areas over here. Only recently has it started to print positive. Now, that's when how you can determine whether the market is in backwardation or contango. So usually you would want to see the funding rates extremely positive for prolonged periods of time to signify that you're in contango and that you're going to remain in contango for a long period of time, meaning that it's a healthy upswing within the market. Guys, do me a favor. You know what Josh always does? He literally gets paid 25 cents per like. So smash the like button because he wants to get paid at the end of this month. Okay, next over here. halving process. So the Bitcoin halving, you can see that it is 72% of the way through the halving cycle, or towards at least the next halving cycle. So it is loading. And we know that if you look at it from a timing perspective, assuming that this time is not going to be different, which so far, so far so good. As long as the price is in an uptrend, you can base the assumption that this time is going to be the same as the previous times, and that means that price should start to rally aggressively as you approach that halving event. And by the time you hit that halving event, you're going into all-time highs, meaning that between now and the fourth halving, which is coming up, is all an opportunity to accumulate crypto. Next, you have Checkmate over here. He says extremely constructive uptick also in Bitcoin's on-chain activity across several metrics. Transaction counts are going up, new entities climbing, free pressure building, and then miner revenues are rising. And you can look at all these metrics over here. So look, you can dive deep into these on-chain metrics, and there is a lot of information out there. Essentially, you want it to be in line with the price action, right? So if price action is establishing a strong uptrend, then you want to consider that the on-chain metrics, if they look healthy and strong, then they're in agreement with one another, and that gives you a higher confluence setup, meaning that you have a higher probability trade that the rally is actually real and it's going to continue. So far, so good. Things are looking good, but bulls are not fully out the woods yet, and I'll show you why on not this chart, but the next one. With this chart, you can see from a momentum oscillator standpoint, you have the stochastic RSIs on the monthly, look similar to all the previous bottoms that we've had. So let me just go back. No, we lost it. 1 second. Okay, here we have it. So if you look in relation to the previous bottoms, it looks similar, right? The timing wise that the stochastic RSI spent on the bottom is very similar for each major market bottom. And now we've just recently broken back above the 19 level. So you can say once you get above that 19 level, that means that bulls are really starting to take control. But the point of this is you can see how much upside momentum is still in play. There could be a lot more legs left on this rally and things could seriously get going. Now, looking at the RSI as well, I told you want to see it reclaim and close a monthly. We'll have a chance to do that at the end of this month, which is coming up in about 9-10 days time. If the white closes above the yellow, then that is your signal for the extremely conservatives, right? Remember, we already started to long way lower when the RSI was over here and started to reclaim the yellow line, the yellow dash line being the 43.53 level. But once you close above the moving average, that's showing you that a powerful trending move could potentially come into play, and that yellow moving average is going to start to curl back up. So we'll need to focus on that. Either way, saying the same thing, a lot of room left in the tank. Same thing with the MACD over here. The histogram continues to weaken, at least from the bear side. So it's becoming lighter and lighter and slowly ticking back up. Then you have the EMAs over here. These EMAs will eventually cross. And once they do and they get above the zero line is coming in where my cursor is now. Then once you cross that zero line, there is a lot of momentum still left in the tank for the bulls. So point being is your next level of resistance for the monthly chart is that 20 MA. We covered that yesterday. That's coming in at 33,000. And maybe you don't break it on the first attempt. You pull back slightly after that. But eventually there is going to be a break of that. And there is a lot more momentum to the upside for that. Okay, next I wanted to overlay from a quarterly perspective, because we're also coming up towards a quarterly close. This is going to be a huge quarterly close, not only for crypto, but for stock markets too. And if you look at Bitcoin with the key quarterly levels marked out, first and foremost, I'll redraw that in a second. Let's delete that. These were the levels that we've been looking at for a very, very long time. So the bottom side, 13,880 for Bitcoin. Is it possible that that could still get hit? Absolutely. Anything can happen within the markets. And it's definitely possible that you could have a move that goes like this, obviously down, up, deviate back down, and you could technically still tap that level. That is a possibility. We outlined that yesterday. And we said, of course, be careful, be wise, and understand that something like that could potentially take place. But The upside level that we had was 28,992. As you can see, we are very, very close to hitting that level now. We almost hit it yesterday, and it's the same thing on Ethereum. Looking at Ethereum's upside is 1,917. The bottom side is 743. So let's see how the quarterly levels close. That will provide us with more information. Depending on what this candle looks like going into the quarterly close, we'll be able to make a better determination moving forward. Cool. Now, these are in the more shorter time frame, the scenarios that we're looking at here. This is the weekly chart over here. So far, we have one of two options, okay? Price is either going to just continue on up from here. If it does, we outline the order block levels that are coming up in that $30,000 to $32,000 level, which is marked by the blue line. I'll show you the order block levels soon. But we're looking at this as a potential zone where when price gets into that area, we need to look for weakness and consider taking profits, getting out of our positions and re-adding lower. So this is the way that I'm playing it. I'm obviously sharing this with you, assuming that you followed the same plan as me. Had you not followed the same plan as me, it's going to be obviously a little bit difficult for you to make a decision. But this is the plan, right? Okay, I entered pretty much all of my positions over here on this wick at exactly $19,700. The wick went down to 19,600. I'm all in at that point, right? Now I have a decision. Price comes up here. Obviously, I've made extra money, additional money on short-term trades. Now I have a choice. I can either wait for the pullback and re-add that capital over here, or I could take profits over here and then also re-add that over here. The decision that I've gone with is I'm rather going to sit and hold my Bitcoin position from the 19.7 level until such time as we follow the blue path. If price gets up here, then and only then I will consider taking some profits. Otherwise, what I'd rather do is if we do pull back following the white line that I've outlined, this trajectory, I would rather take some of the profits that I've made from my leverage trades and add those in at this level. That level is coming in at $25,000. The reason why, and there's no technical science behind this, it's more just based off of my experience. My experience is that when powerful trending moves begin, my mistakes in the past have always been that I tried to get too clever, sell into a strong trending move, looking to re-add on the pullback. And sometimes that pullback doesn't happen. Price just continues to rally and things start to move aggressively. And basically, I end up having to buy back higher. I don't want to make that same mistake again. Therefore, I think that the best decision for me to do is take any additional capital that I get and add it in on any pullback or back test into here. So I'll rather leave my positions with a chance to run. So that's what I'm looking at over here. Now, it's all going to depend on what happens with the FOMC. Obviously, none of us have crystal balls over here. We're not fortune tellers. And even if you are a fortune teller, you're probably going to get it wrong sometimes as well. So there's no possible way that we can tell right now. We're kind of in the middle of no man's land. I'll show you in the low time frames why. There's not much that we can do over here. We need to wait for price. I told you always do your business at the extremity. So we need to wait to see when we get to the upper extremity or the lower extremity, then we can make our next decision. Right now, there's not much that you can do, at least for Bitcoin. Okay, moving on. The Gaussian channel showed you yesterday. We tagged that exact straight into the middle of the Gaussian channel. You can see the posture of the EMAs. Everything is looking bullish. Everything is looking strong. You do have the EMA 9 and 18 golden cross. That was one thing that gave us the confidence that we want to start adding into our long positions. You have the break of the lucid SARS. That stands for stop and reversal. So you broke the stop and reversal, showing that there's a reversal that's taking place off of this candle. And then any pullbacks over here, you technically want to add. So what I would say is if you reject off the middle Gaussian channel now and prices start to pull back, if you get as deep as 24K, that is actually, to me personally, an opportunity to re-add into the positions or to take some of the spot Bitcoin that I have and consider using a low leverage swing trade position. Maybe I move some of that into a 3 to 5x leverage and I can hold that position for longer periods of time. Otherwise, in the long run, what am I saying? This is the weekly chart. Your upper channel is still the next target, right? 33,000. So it's in line with what I just showed you on the previous chart. Okay, next, you have a break of this area, which I outlined, 27,482. You have a clean break. I told you yesterday as well, if you are an extremely conservative trader or investor, and you basically want to only enter into 1 or 2 positions per year, what you'd be waiting for is this. Okay, you broke this line on the bottom here, which is coming in at 24,581. As soon as you broke that line, that looks like a breakout, right? It closed above. A lot of people would say, cool, that's a confirmed breakout. But in actual fact, the only way that you can confirm 100% that this is a breakout is once you see, let me just get that off. Okay, once you see a close above the top of this candle, as long as there's a green candle close, and that's coming on the, if you're trading the 4-day chart, that's going to happen in 16 hours and 58 minutes. If you close above that level, that means that this breakout is 100% confirmed and it's all systems go. I told you yesterday as well, this is too laggy for me. That's why I enter much more aggressively. But ultimately, the point is the posturing of the different moving averages is bullish, because you now have the yellow above the green, above the purple, and more importantly, all of them are angled upwards, which means that, right, a lot of bots and algorithms run the markets. There's huge amounts of money that influence the way that the market runs based on those bots and algos. And therefore, what that means is that once these EMAs on multiple different timeframes, obviously the bots and algos don't just use this, they use multiple strategies, but this gives you an overall view that once things start to establish an uptrend, then all these bots and algorithms start to jump in, meaning that massive funds and institutions start to allocate money back into the market. And one of the biggest ones is the 200-week moving average, which I showed you on the previous chart, right? That's this orange one over here. So if you had to clean everything up, let's just take all the drawings off and you're only looking at the chart. There it is, the orange one. As soon as you clear that and hold above that, every single major bot and algorithm will start to kick in around that level, looking to buy any pullback that comes into that zone, which is 25,500. Okay, so basically, from what I've said so far, upside, you're looking for weakness in that 30 to 32K range. Downside, pullbacks are between 24 and 25.5. But you don't want to spend a lot of time under 25.5. If it comes below that to 24 region, you want to see that happen extremely quick with a quick wick down and then a bounce up. Cool. Next, the dollar. So the dollar did start to break down. It fell below that key yearly level. This is obviously a good sign for us. Remember, we don't want to see this breakdown too aggressively, because otherwise things become chaotic in the world and it's just a big problem. What you want to see, or hope for at least, is just a gradual breakdown, and then slowly it can distribute. But you don't want to see this thing absolutely nuke in one candle and 𝗏𝗍𝗄 gets his bet correct and Bitcoin's at $1 million by the 15th of June 2023, which is just after my birthday, by the way. Hope you guys remember that. Okay, key yearly level. So we're watching this zone over here. Is this going to flip from what was previous support into resistance? So far, it's looking so. I'm on the 8-hour chart. You can see the rejection of the 8-hour candle into that level. And now the next candle is already struggling to get through. So it is possible that we are starting to flip what was the previous support into resistance. So look at that. Next candle opened down. This 8-hour candle pushes up. Next candle so far struggling and rejecting. If that continues down, of course, it's going to be good for crypto. The other thing I wanted to look at is the yields, the 30-year yields. Look, 30-year yield is coming into a key level. Usually when the yields increase, it's generally quite tough for risk on assets to rally. So you mostly want to see these going down. So they haven't broken down completely yet. They're kind of consolidating. You can see that this is a range, right? Got the range over here. This is still in a range. You would want to see a distributive pattern like that on the 10-year. That has yet to come. What about the 2-year? Same thing. The 2-year is in a range. Yes, you had a big spike down over here. You broke the structure in relation to that level. Now you want to see maybe it can make a lower high over there, and then slowly but surely we can create a distributive pattern. That would be something that would help risk on assets rally. The 1-year looks like it's rolling over. I mean, this one, look at that. You went straight up. That was absolutely brutal. That's why risk on assets got absolutely murdered in that scenario. Same thing over here. Broke the structure down in relation to what's on the left over here. Let's see if it's going to come back up into this zone. That is the wrong line. 1 second. What is happening? Oh, wow. Okay, let's just grab that again. This area over here. Let's see if we can flip that into resistance. and start to reject and come back down. That would be good for crypto. Then another very, very important thing is we are starting to approach those range highs, which means that as long as crypto is going to maintain its strength, if Bitcoin dominance slowly starts to come down, then altcoins are probably going to rally. So we are coming into that key level, pretty much anywhere between right here, where we're at now, which is 47.6, and I would say up to probably as high as about 49, because you might get a little spike over, right? You might get a bit of a deviation like that, and then it might come down later. So this is your area where you want to start to look for altcoins against their BTC pairs, which are strong. Okay. So keep a close eye out on that. I'm going to give you some ideas of what you can potentially look for in a couple of tabs time. Total 2. We still are yet to see a confirmation of a break of trend on total 2. I know I have a lot going on over here, but let's just bear with me. So you have pretty much lower high, then you had lower high over here, which we broke, right? We broke through the trend line. It retested, broke back up. But technically speaking, there are still lower highs. The overall trend line has been broken, but the lower highs are still intact, right? This is total 2, lower high. This is also a lower high. It's pretty much equal highs. This one closed ever so slightly above if you're looking on the 3-day time frame. So you really want to see a convincing break, which is this trajectory that I've given over here with that chart over there. Once you start to break and hold above here, I think that's when it starts. It's safe to say that you can start looking to position yourself into altcoins, because maybe things are really going to start to get running. But that is yet to happen. I have to be clear with that. So total 2, as a reminder for those of you out there, that is all the altcoins, so Ethereum and everything else minus Bitcoin. So no Bitcoin in that. Total 3 is all the altcoins minus Bitcoin minus Ethereum. So it's all the other altcoins. This one is a lot weaker. This one's easy to see, right? You yet to break that downsloping trend line. You have lower high, but you are consolidating around that level. And I've always received a lot of flack from people when I say this, because it's contrary to popular belief, but you can kind of backtest it. It's 100% truth. What happens is when things consolidate into resistance, so let's just say you're focusing on this line over here, and this is resistance. When price consolidates either into resistance or support for a long period of time, that usually leads to an explosive breakout. So point being, as long as total 3 can kind of hold within this area for a little bit longer without any major breakdowns, it will eventually have an explosive break through that level. And then, of course, altcoins will fly. But we're not there yet. If anything, altcoins are still in danger, which is actually one of the reasons why I sold mine. So I made a tweet over here. I did that yesterday. I said I forgot to post this update this morning, but rather late than never. I took profits on the aggressive dollar cost average strategy. Remember, guys, I was running a dollar cost average strategy on OKX. I'll bring it up for you in a second so you can actually see what I've done. I was running some of them aggressively where I was adding like $2,000 a day for 3 months or something. And then the other ones I was running as 1-year strategies. So I said I took profits on that. Bitcoin is now coming into resistance, and alts were taking too long to pop. The risk is too high going into FOMC. I'll rather re-add it later, whether that be higher or lower. And I said the full explanation on the show. Bam, see, I keep my word. Here I am on the show. Smash the like button. Yes. How do I even say that? Wahidullah Khan, smash the like button. Alfie and Teddy, good morning to you too. Are you guys present? Let me know if you are present. Jasnaz, I can see Ricket Science. We got Double Hit. We got the Dizzy, Holidem, Brandon. We got Chaos. How's it, Chaos? Hope you're well. Banter Girl, always a pleasure. Cool. I see everybody is here in the chat. Okay, let me bring that up. I have to quickly take my screen off so I don't dox all my passwords and stuff. Give me a second. I will show you what I'm looking at over here on OKX. Oh, I pulled the wrong one across. Okay, guys, give me a second and I will get in there. Okay, I think that we are safe to share the screen again. All right, here we are. So let's go here to trading bots, recurring buys. Okay, that is what I have left, right? So I said I'm going to keep leaving the Bitcoin one running because it's really Bitcoin's time at the moment. So I see Noah says the password is his birthday. No, it's not. It's my birthday in reverse. I always do it backwards. Cool. I have the Bitcoin recurring buy over here. I've left the 1-year gaming portfolio and I left the 1-year portfolio. So I have given these on the show before, but there it is. If you want to zoom in and screenshot, that is the 1-year portfolio. And then this is the 1-year gaming portfolio that I have. So pretty much the 1-year portfolio is down 7%. I'm contributing $150 a day to that, $10 a day to the daily one, and I'm doing that over the course of a year. That's very different to my aggressive portfolio, which I now took profits on. The Bitcoin one, I think Bitcoin's great to have, and I'm just going to leave that one running for as long as I can, $100 a day, and we'll keep that going. So have a look over here. This is basically what my recurring buy was doing beforehand. I was contributing, you can add all of these numbers up. So here you can see the Bitcoin one. Let's just go there. Okay, cool. So this is what I have left. These are the ones that I closed. 550 per day, 400 per day, 165 per day, 75 per day. And basically here is the profits that I capitalized on with their percentages on the right-hand side. I was hoping for more from altcoins. I thought that maybe they'd start to catch a bid sooner, but I just think that the risk is too high going into FOMC. If altcoins have not rallied yet, and you look at some of their BTC pairings, it actually doesn't look too great for the majority of them. Use 𝗬𝗏𝗍𝒑 just as a proxy for the overall market. That means that if Bitcoin were to reject here from 28K, and let's say it breaks back into its range, so it loses, it comes to the range high, remember, is at 25.5, around that level, it breaks back into that level, that whole thing would start to look like a deviation, right? Can you imagine what that would do to altcoins? I don't want to be sitting with such a massive, I think I'd built this thing up to about $50,000 that had at that time been invested. I took out, it was somewhere around, I think like almost 60,000 because of the profits that I made over here. I don't really want to be going in with that kind of risk. It's just simply a risk management strategy that I'm following. Okay, so that's my reasoning. Hope that helps. Okay. McKenna says over here, this is what vertical accumulation looked like in 2019, and it's remarkably similar to the current price action. 2019 versus 2023 has been shown below. And there it is. There you have, this was 2019. It is very, very similar. You have just this, basically, it's kind of like an upsloping bull flag, right? So you had usually starting already from over here, you have a big move up, consolidate, massive move up, your pole, consolidate, creating pretty much yet another bull flag, and then big move up, breakout, and then off it goes. So let's look at what it looks like right now. So here you're coming into this zone over here. So that's why, is it possible that we're only going to have some sort of a rejection or pullback from that 30K level, right? Look at where we are now. So he's showing here the breakout's going to come into that zone, right where I'm looking at the order block level between 30 and 30, I think it's $30,000 and $33,000. That's why I'm not willing to sell my Bitcoin, even though I personally believe that we're probably going to pull back going into FOMC. And I'll give you a few other reasons why. It's just not worth selling if you got in at a lower price point. Okay, there's the order block level. Just as a reminder, why do we have that level? Because of this, right? This is what led to the breakdown. Consolidation creates an order block. Big sellers come into the market. It gets sent down. Then we had the whole Wyckoff accumulation with, as well as a falling wedge pattern. It played out almost perfect. We just got caught off surprise by this, but we capitalized on that based off of the 200-day moving average coming into that level. And that's where we loaded up our positions. Now, this is where I expect real pressure to come in. The only question is, how deep do we get into this level? Do we just do a little under-over thing? Or do we go really, really wild all the way up to maybe 33, 34? So to me, it doesn't matter. All that I know is that this is what I'm looking for. This is what I'm looking for. I'll quickly show you. Wherever that level may be, let's just pretend that that's the price action. I'm looking for this to happen. Key level, I'm going to mark off a key level. Once I get under that key level, and I can prove that there's going to be distribution. How do I do this? Probably looking at about maybe a 15-minute to a 1-hour chart. Anywhere around there is where I'll be making that decision. Once that happens, what do you have? Well, firstly, you have a deviation over a key level, the orange line being the key level. comes back down, break structure over there. So making a lower low, then you have a lower high, which is over there. And then pretty much that's your signal, get out. And then wherever that happens, whether that happens at 28, whether that happens at 30 or 34, I'll make that decision at the time. And of course, as always, I will update you guys once something like that does take place. But for the time being, pressure remains up and I will continue to hold. So here we have the Coates moving averages as well. This is another helpful indicator. I would love to see those key levels get hit. This is not confirmed yet, right? You need a daily close for this cross to happen to the downside. And I've told you before, I would love to see this push into that 4 region. So if you look on the scale on the right-hand side, around that 4-point level before that starts to turn over, that would give me a high confidence sell. And then I can take my profits. I think I'm up somewhere in the region of 40% on my entire portfolio, which is absolutely wonderful in less than 2 weeks. I'm very, very pleased with that. Okay. Then we'll be looking for a little bit of downside and we're going to buy the dip. That's going to be the next step. I'm warning you in advance. The strategy thinking forward is we're going to buy the dip when the time comes. Okay, another thing that I'm looking at over here is the TD sequential, 𝗕𝗏𝗄. You can Google him if you don't know him. 𝗕𝗏𝗄. He has this TD sequential that works on a 9-count basis. So usually what you're looking for is a 9 sell. You have a buy. Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9. I didn't even know this at the time that you had a 9 buy. I bought mostly because of the 200-day moving average, the blue one. I knew that was a simple invalidation, as well as the weekly SAR also came into this level. But you had a 9 buy over here. That's a strong buy signal looking for a 1 to 4 candle up move after that. So we got more than that, right? 1, 2, 3, 4, but at least 1 to 4 would be the trade. Now you have the same thing happening at the top. You have a 9 sell. So TD sequential 9 sell. It's showing you over here that there's a high probability that a reversal will take place from this point, meaning you're looking for more downside. Now, what would confirm that? Well, you would need to wait for a little bit lower prices. Look at how these levels line up. So firstly, you can look at the RSI. Let's just move that up. I'm just trying to get these levels. There we go. The RSI is going to cross down when price falls below 26,683. 26,683. This number changes each and every single day. So for today, if price goes and closes below 26,683, then the RSI is going to cross down 26,683. Let's remember that and mark it off. 26,683. Okay, let's mark that off. $683, put in the coordinates over there. So look at, this would have been the level that I would have shown you as well. I said, how do you confirm that a reversal is taking place or a proper correction? I was going to say to you, when you break below the wick of this candle. The reason why I'm showing you this is because I find it interesting that it lines up with the RSI. The RSI also turns down below that level. So what am I saying? What I'm saying is that if prices start to come below 26,683, then it's going to ultimately be pressure down. And then you need to look for how price reacts on the lowest support levels, which the first area of interest is going to be 25,500. So do keep that in mind. This is also not telling you that it's full on bear mode again. It's just telling you a 1 to 4 candle correction. So you already have 1 on the 9, 2, 3, 4. Okay, 4 days. Basically, the rest of this week is probably going to be downside pressure, at least according to this. It's not 100% hit rate. Of course, this can start to rally and then the count can continue. So be careful of that. Next, so this shows really about if Bitcoin pulls back, finds support, and then maybe this time the dominance tops. This is what I'm thinking. This is what I'm thinking is a possibility, right? I'm thinking that if Bitcoin pulls back and alts obviously continue to bleed, Bitcoin dominance will push up further towards that 48 to 50 level. And that's where it will probably top out. Okay, once that top comes and the market finds a bottom, so Bitcoin finds its bottom, let's say 24K, maybe it's 25K, and it starts to bounce. My thinking is that the Bitcoin dominance might start to shift at that point because a lot of people obviously missed out the Bitcoin run. They're going to be looking for next best opportunities, which are probably going to be in altcoins. Then they're going to be looking for strong altcoins against the BTC pair. We're still yet to cover that. not yet relevant because we haven't got there yet, but it will be relevant this week. Okay. Then my thinking is the Bitcoin dominance drops and altcoins start to rally more aggressively than Bitcoin, catching up for the missed gains, which have happened. Basically, they've missed out on the last couple of weeks. Another very good narrative, I think, to look at is this. And it's the Arbitrum ecosystem, right? So if you look over here from 𝗵𝗵𝗍, and he must be smart. I mean, his literal name is 𝗵𝗍. So 𝗵𝗍 must be a brainiac. And if he says that the active weekly users are going up, then they must be going up. So you can see over here, that's a good sign. A sign that obviously people are using Arbitrum, and basically that shows value. Now, from Jay over here, the Irishman, fun fact, I gave him that name. Yeah, I take full credit, Joe. I gave you that name, the crypto handle, the Irishman. Okay. For the ARB token launch, pay attention. He says, hype token launches the last while have all had the exact same playbook. Blur, Optimism, and Aptos. So what is the playbook? Firstly, there's an aggressive move up. So you can see that's marked with a green area, right? Very, very aggressive move up on the launch. Very difficult to play that if you don't have the tokens. I don't know if it's worth aping in on the first day, because following that is there's a slow and controlled sell-off. So the two ways you can play this, you can short that slow and controlled sell-off that happens, and then there's a quick recovery. So once you see a change of structure over here, and basically that there's going to be a reversal taking place, you want to get into that position, and that's your opportunity to get in and hold. Remember my rule. I've told you guys this before. He says, yeah, also, let's finish off his tweet. I expect Arbitrum to do something similar. Cool there. Well done, Joe. Okay. My rule of thumb is that usually when it comes to things like IPOs or anything that launches that's new, so on the stock market, it's an IPO. In crypto, it's an IDO, ICO, whatever you want. They keep changing the name, but it's a coin that's launching a new. From once it's set in the top, almost always, minimum, I'm almost starting to wrap over here. The minimum drawdown that you have is 50%. From top to bottom, you're looking at a 50% pullback. Don't even buy it until it's at least had 50% pullback, and then you can start to get interested. Let's look at these ones over here. Optimism, that went down 75% from its top. This one, which is Aptos, went down 69%. And then you have Blur, which went down 65%. You see? So don't even consider taking the position until negative 50% has been hit. Next, 𝗕𝗍𝗍, the DeFi villain. He says, week recap, two main narratives, Bitcoin because of the banking crisis, and then Arbitrum. He says all the alts somewhat related to Bitcoin outperformed, which is STX, REN, RIF, Alex, and SOV. I don't know what these last two are. Arbitrum announced its token launch, and the whole ecosystem benefited hugely. So you got Magic, GMX, Grail, PLS, Sliz, Jones, RDNT, ZYB. I know some of these, but not all of these. So he basically goes on to explain why these ecosystem plays would run. Now, some of these have already run. I managed to get into Grail, so that one was phenomenal. I think it's like 4x up. I didn't put my life savings in, but still, it's good money. This is the money I'm talking about, where if Bitcoin dips, since I'm already fully in, I'll take those positions and re-add at lower prices. What you can do is you can go to Camelot Launchpad. Now, Camelot Launchpad is showing you essentially the white lists that are coming up. Whitelist means that you get onto a list where you have a fair chance of getting into the IDO for a particular token before it launches. So this is where you could have got Grail, right? I didn't get Grail on the whitelist. I got it soon after it had launched. But if you do look at something like Grail, you would have paid a minuscule amount of money. Sometimes you pay a couple of cents to dollars for each thing. I think Grail was at $250 per Grail token. But if you look at the Grail price now, it's like 4,700, right? So this is where you have the opportunity for these Arbitrum plays. When they do launch, go to this launch pad over here, and then you'll want to whitelist for that. Okay, next. Bitcoin over here. Let's see quickly on ETH how these are looking. Let's look at the tokens relative to US dollar pairs as opposed to Bitcoin pairs. I know I said we're going to do that, but we'll have to do that at a later stage, maybe tomorrow. Okay, you're coming into a key level over here. This is the equivalent of Bitcoin's 25,500. It is Ethereum's range high. So you really want to see it hold over here. As I've denoted with the blue arrow, you're looking for this level to hold. Failure to hold this level will start to look like a deviation, and it's going to come back into the range. Let's see over here. Look, okay. This is a short trade over here. GMX, it was dropped in the Discord. If you want access to that, you need to go into the Discord. Let me quickly bring up the Discord for you. There it is. Quickly get that away again. Okay, there is the Discord. Here are some of the trade setups. Everything is in here. If you want these, make sure that you go through to the Discord. Here's the thinking on the low time frame behind Bitcoin. This is where we really get into the nitty-gritty stuff. And I'm helped by my legendary teammate, who's a top-notch trader. Okay, so keep an eye out on that. All those trades are there. Litecoin, I'm going to only go through a couple because most of them are going to look exactly the same. So you can see rejection off the top level over there, coming back down. Ultimately, you'd be targeting on Litecoin back to the range lows. Compound, not much of interest. Solana. Okay, Solana, guys, remember Solana, everyone was getting super excited by Solana yesterday. But what you do have to consider is this, right? So Solana was coming straight into major resistance. Look at that. Pretty much all the way from a major breakdown point yet to break this trend line. So let's zoom in. Plus, you have the underside resistance over here. This is all resistance. Everything underneath here is resistance. And yes, it did move. But if you look at that, this looks pretty nasty. Now that I'm zooming in over here, let's just clean this up. And I dropped this in the daily candle newsletter yesterday, as well as a potential short trade. Look at the posturing of that candle on the daily chart. Once you start to break below here, when I say here, I'm talking about $21.04. Once Solana starts to break below $24.04, you're going to convincingly have broken that trend line, and you're going to start to make a new swing low with a rejection candle coming from an incredibly key level. So this is my point, right? You got to be careful on these coins. Sometimes it is safer to go for things like this Arbitrum ecosystem while the hype is at least there. Okay, Atom. Okay, Atom is kind of stuck within a triangle between these ranges, so the pink zones. It is approaching the bottom part over here. It could offer a potential buy once it gets around that $10 level. We'll need to reevaluate when it gets there. Let's see, the gaming ones have done phenomenally well. Okay, Vulcan Forged. Vulcan Forged had a big pump, but look at that. Everything is still range bound, right? There's your range. Big range. Failed to get back above the mid-range over there. Rejection from the mid-range like it has done so many times before. Let's see Link. Link is my favorite stable coin. It is still stuck as well. There you go. Below the mid-range. Another rejection from the mid-range once again. Therefore, you're looking for a sweep of these lows. If you want to accumulate Link, pretty much anytime it gets into this pink box, which is around that $5.40, that's an opportunity. So you can see overall altcoins look bad, right? You can imagine if Bitcoin starts to nuke from here, what that's going to do to the altcoins for the most part. So just be careful of that. Okay. Yesterday, we outlined a potential smaller range over here. So this lines up with what I was showing you, right? So let's go into a 4-hour chart. If you're wondering what I'm talking about, you're going to have to just go to this section from yesterday's show. I showed you over here, right? We're looking at a potential smaller range over here. So you could kind of play this range, and then eventually there might be distribution, and then you have the opportunity to buy the dip. The same thing I showed you when I marked out the levels now with the RSI. There it is. Once you start to break below this, you confirm that you're leaving the smaller range, this being the smaller range, and you're going to start to distribute back down. And then it's a question of, do you buy the dip here or not? Let me know in the comments. What are you going to do? Are you guys going to buy the dip if a dip comes? How invested are you in the market? What percentage allocation do you have? Are you going to be holding onto your positions? You do also have a divergence that's forming. You can see on the 4-hour chart, right? You can see, of course, price has been moving up. And then I don't have the RSI, but I have the stochastic RSI over here. Overall, the stochastic RSI has been coming down. So we do have the makings of a bearish divergence, which is currently forming. So once you start to break this down, again, you need to look to lower levels. Okay, I think we've pretty much covered it all. Not that much has changed based off of yesterday, other than I've just updated you on pullback levels because that is my thinking that we probably are going to have some sort of a pullback. Okay, guys, if you want to get into the Discord, I see. Okay, if you want to get into the Discord, go over here. All the links are there below. Make sure that you click that link to sign up if you want to get in. And in order to get in, you need to use one of these exchanges. So you can either use Bybit, you can use OKX, or you can use BitGet. All of them are good. And then also for your protection, make sure you have a NordVPN account. Is there anything else that I need to mention over here? Also, there is Sniper School registration open if you want to join into that. That's it from me, folks. I hope that you all have an absolutely stellar day. I appreciate each and every single one of you. And until next time, cheers for now.